Welcome to the CFA Level 1 Practice Test 1. Domain, Quantitative Methods. Part 4. If an analyst lowers the significance level, alpha, for a hypothesis test, which of the following outcomes is most likely? A. An increase in the probability of a type I error. B. A decrease in the probability of a type 2 error. C. A decrease in the power of the test. D. None of the above. Answer is C. A decrease in the power of the test. A financial analyst notes the company's coefficient of variation for ROE is higher than peers. What does this likely imply? A. Lower risk per unit of average ROE than peers. B. Greater stability in profitability compared to peers. C. Greater relative dispersion in ROE compared to peers. D. Not applicable. Answer is C. Greater relative dispersion in its ROE compared to its peers. Calculate the NPV and initial decision for a stock with given dividends, sale price, and 8% discount rate. At -$2.02, the stock should not be favorably considered. B. $2.02, the stock should be favorably considered. C. $7.50, the stock should be favorably considered. D. None of the above. Answer is at -$2.02, the stock should not be favorably considered. Which best describes a characteristic of a normal distribution? A. The distribution is leptokurtic. B. The mean is greater than the median. C. Approximately 68% of observations lie within one standard deviation of the mean. D. Not applicable. Answer is C. Approximately 68% of observations lie within one standard deviation of the mean. A core assumption of the efficient market hypothesis, EMH, about market participants is that they A. Are prone to systematic behavioral biases. B. React slowly and incompletely to new information. C. Are rational and process information quickly and accurately. D. None of the above. Answer is C. Are rational and process information quickly and accurately. Why does the time value of money favor receiving money sooner rather than later? A. All future investment opportunities offer risk-free returns. B. Money received today can be invested to earn a positive return. C. Future cash flows are always adjusted for expected inflation. D. Not applicable. Answer is B. Money received today can be invested to earn a positive return. An analyst says, p-value is 0.04 and significance is 0.05, so there's a 4% chance null hypothesis is true. This statement is A. Correct. B. Incorrect. P-value is probability the alternative hypothesis is true. C. Incorrect. P-value is probability of observing data if null hypothesis is true. D. None of the above. Answer is C. Incorrect. P-value is the probability of observing the data if the null hypothesis is true. The nominal risk-free interest rate is best described as the sum of the real risk-free rate and A. An inflation premium. B. A liquidity premium. C. A default risk premium. D. None of the above. Answer is A. An inflation premium. An investment project requires $100,000 initially and expects cash inflows of $30,000, $40,000, and $50,000 for 3 years. At 10% discount rate, closest NPV is A. -$2,104. B. $2,104. C. $20,000. D. Not applicable. Answer is A. -$2,104. The weak form efficient market hypothesis states current stock prices fully reflect A. All publicly available information. B. All past security market data. C. All information, public and private. D. None of the above. Answer is B. All past security market data. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.